Well, there's been a lot of talk here in recent weeks about the possibility of a 50-year mortgage. President Trump floated the idea out recently. Let's get a mortgage lender's opinion on what that could mean. Is it a good thing, a bad thing? Does it give you more options? We'll get all that next with Bill. Welcome in. I am Ben George with Bill Litton of Cross Country Mortgage. You can find us online, smartmortgageshow.com. So, Bill, let's talk about the 50-year mortgage because I think it got a lot of attention. It's in the headlines quite a bit now, especially if you are a home buyer. President Trump did float the idea recently. Obviously, nothing has happened yet, but there's a lot of talk right now about the 50-year mortgage. Are you guys paying close attention to that?
We're certainly paying attention to it. And what I would say is we're always looking for viable options to help home buyers or renters become buyers, people to move up, people to purchase. What would this look like on a second home or an investment property? So we're always looking for good, viable options for our clients, and we're really interested to see how this would turn out.
Yeah, so I want to get your thoughts. I think that's the goal here because obviously it's been a very polarizing topic of conversation. Some people saying, hey, it's a great thing, right? Give you more options. I mean, I think probably similar to when the 30-year was introduced, right? Maybe that seemed like a long amount of time to have your loan outstanding on your home. But on the other side, there's a lot of people that are saying, well, you're going to be paying a lot of interest. And is it worth all the interest you'll be paying up front in order to own that home? So I just want to get your thoughts on it. Obviously, we don't know any of the details and the specifics, but I'm curious kind of what's your overall view and opinion on the 50-year mortgage?
So I think like most of the products and options that we talk to our customers about, things that are available, it's going to be dependent on the individual. It will not be right for everyone, that's for sure, but neither is a 30 or a 20 or a 15-year loan or an ARM or a reverse mortgage. So it's definitely going to have a specific audience. There are considerations that we need to be really cautious of. And one of those is just there's going to be a much higher payback in interest. So if the payment between a 30-year and a 50-year loan is negligible in your budget, meaning either way, it doesn't really move the needle a whole lot or cause you any pain, then certainly the 30-year is going to be the better option. Okay. But what we find a lot of times is, and this plays into to Ben, to your question, my overall view is it could be a really good option for the customer that has no other options, and this gets them out of renting and into owning. So for that individual, we think it could be a really good option.
Yeah, and I think that's the big positive on it is because you look at a lot of homeowners, right? I mean, we're going to talk about this on a future episode, but the average age of homeowners getting older and older. As the housing market continues to increase in price, it's pricing out a lot of people. Now, this would give people another option because their monthly payments would come down. Again, as you mentioned, the downside would be more interest over time. Do you think we would see an increase in just overall movement in the housing market? I know it hasn't necessarily been stagnant, but as we talked about with rates where they were 5 years ago, a lot of people are just kind of staying put with where they are. Do you think this would create a little bit more movement?
I absolutely would say it's going to create more movement. And I think that the question is how much movement, right? Is it going to be a dramatic amount of movement? I don't think it'd be dramatic. I do think that what it would do is, of the first-time home buyers that we talk about, if 50% of them move forward and 50% don't. Mm-hmm. Of the 50% that don't, 10%, maybe 15% of those folks would actually, benefit from it and utilize it. I still think the 30-year fix would remain the gold standard, and this would just be another option if the 30-year fix doesn't work. Why we would want to use something different would be more for qualification purposes to go to the 50-year. And And again, I think we've talked extensively about the 30-year fixed and why it really is the gold standard. You know, a lot of people think, well, it's a rite of passage to go to a 15-year loan. I mean, it makes sense for some, but I think the 30-year has the most distinct advantages. I don't think that's going to change. I think it'll still be the predominant option, with this 50-year being more like, an alternate option to the 30-year.
Yeah. Do you think people are maybe looking at it wrong? The ones, I guess, maybe that are looking at it negatively. And I say that because, you kind of explain, hey, maybe this does give you the option to get into a home and become a homeowner sooner, right? And begin building that equity. Because I mean, that's where, a lot of the value is in owning a home, right? Is begin building that equity over time, really helping set yourself up for the future. I know you see your 50 years and people talk about, well, it's going to be this huge, enormous interest number. But how many people would actually kind of use that to get in? And then, as the home increases in value, maybe use that as an opportunity to move to a different home, right? As we always do, we maybe try to upgrade to a different home, use that equity, put it to the next home, but also then at that point, go to a 30 or a 15-year mortgage. So a lot of people actually wouldn't stay in that 50-year the entire time because they would look to improve their situation as they build equity.
100%. It's a way to get your foot in the door to home ownership. And that is something that, to your point, a lot of people with the current interest rate environment, the inflationary issues that we've seen, all of those things are keeping people out of the housing market, right? Or not allowing them to get in. It would allow them to get in. And the average life of a 30-year mortgage is 7 years.
Yeah.
So it's not like the average life of a 50-year mortgage, we don't know what that is yet, but it's probably going to be something similar. So when you look at the total cost of that mortgage over 50 years, it's exorbitant, but nobody's going to have it for 50 years.
Right. I think, as you mentioned, you might be paying almost all interest up front, but your home's building equity, and then you can use that equity towards your next home. So I think that's interesting. I don't know if you've had any conversations about this, Bill, but what do you think would be different about the process in terms of securing a mortgage? In terms of what you need to do, what you need to be prepared for, and then also, would there be any maybe changes in rates for 50-year versus a 30-year? Any difference?
So, Ben, really quick before we go there, I want to give you one example. So, you mentioned, okay, we get in the house and now there's appreciation. So in 2019, if you had no options to get into a home from 2019 until today, in Chester County, Pennsylvania, there's been a 60% increase cumulative in home values.
Yeah.
Okay. So a $500,000 house is now worth $800,000. So that's $300,000 in equity gain if you purchased in 2019. If you had no option other than a 50-year mortgage, you would have missed out on that $300,000 or 60% increase from 2019 through 2025. So giving options and also working with professionals that are going to shoot you straight, give you the good, the bad, the ugly, let you know, okay, this is step one of the plan, but this is not the whole plan. We want to move you from the 50-year to a 30 or a 20 or a 15. Look, a lot of the people that I work with in the industry, they're good people. They want to help. They want to help people make good financial decisions. If you're working with a good lender, they're going to help you maximize the benefits of a 50-year loan and not stay in it too long.
Interesting stuff. Just to kind of finish off there, Bill, just do you think there'll be any differences in the actual product itself in terms of rates? Would it be a higher rate? Would there be anything different in the mortgage lending process, or is it still too early to tell?
So this product, we don't have details on the underwriting guidelines yet, but any lender that's going to put a loan out there for that technically does not need to be paid back for 50 years, it's going to carry a higher interest rate. So rate's going to be higher. I would venture to say there's a really good, I have a high confidence level the rate's going to be higher. Underwriting guidelines with debt ratio and credit score, I imagine, are going to be similar to a 30-year fixed. But I definitely think that with regards to the interest rate, it's going to be higher, but it can't be high enough. If it's too high and the payment is there then prohibitive, it's not giving you the payment decrease you're looking for, it would defeat the purpose. So they're going to have to figure out, what's the appropriate rate on a 50-year note. At the same time, it still has to deliver the savings that the customer's looking for. So I think a lot of that remains to be seen, but I would venture to say it's something down that road.
All right, very good. Well, of course, Cross Country Mortgage will be on top of it and be able to fill you in should this actually become a reality. And if you want to discuss your options with Bill, whether it be 15, 30, 50 eventually, refinance, whatever that is, get in touch. Text the word LEND to 21,000 to begin that process. But interesting to kind of see where this is headed, Bill. It's definitely big news potentially, and we'll be on top of it here on the Smart Mortgage Show. So thanks for watching. Please subscribe if you haven't already. We'll talk to you again soon. This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.